Okay, so today I'm going to be going over a way to automate trading strategies and get alerts. So essentially, you don't have to be watching the charts all the time. You can just get an alert exactly when you need to trade and do the trade and live your life. You don't have to be sitting in front of the charts. But yeah, I'm going over a Trade Pro strategy, and I like his strategies because they're they're pretty easy to follow, and they also work off of indicators everyone has access to. And he's definitely not a trading guru. He is pretty transparent with what he does, so that's obviously very good in the trading world because there's a lot of stuff that's terrible. But yeah, so essentially how it works is you have an EMA or two EMAs. You have a 50 and a 200. If the 50 is under the 200, you're looking for shorts. Vice versa for longs. You then have a divergence indicator for RSI and then a stochastic indicator that you'll use for crosses. If you're in short territory from the EMAs, you're going to wait for a bearish divergence, whether it's hidden or just normal, to form, and you're going to wait for that, and then you're going to wait for the cross, and you're going to enter position at 2-to-1 risk reward ratio with a stop at the swing of the last high, targeting 2-to-1. And of course vice versa for longs. And yeah, it's on the 1 minute chart. So a lot of high frequency trading is done on short time frames because it isolates the trade within a short time frame and it doesn't care about the long-term trend per se. I know you're using a 200 EMA, but it helps isolate a trade within a specific area, and it doesn't allow you that much time for, let's just say Elon Musk tweeted and crashed Bitcoin. That doesn't really happen on a short time frame because you're just in the trade for a short time frame. So it's awesome for automating trading. But yeah, this is what he claims right here. In 9 days, 53% growth with a 2-to-1 and 51% win rate. That is a little too much to believe. I don't know what leverage he's using, but even if you got 9% in 9 days, that is ridiculous. That is amazing. You can turn $5,000 into well over $100,000 making 1% a day. That is, even if it's 1% a day, so 9% in 9 days, that's amazing. So let's go into what I did. So I'm going to close that first. We have our indicators, our EMAs, our divergence indicator, and our stochastic cross. I'm using a different stochastic cross. I found one that has an alert system already programmed in for a cross. And that just says that a cross is already defined in the code. So you don't have to write that. If you find something like this, you can just copy it and use it. But yeah, so the cross is already defined. We have our divergences, our hidden bearish and our bearish, and then our bullish, then our hidden bullish, and our EMAs. So we're going to combine all of this into one script that essentially allows you to get an alert exactly when you need to trade. So you're going to pick an indicator. I chose the divergence indicator first. I copied the code by clicking this and copying everything. And I put it all in, and then I went into the stochastic RSI code. I copied that, and then I put it in under right here. When you copy two individual scripts into the same script, you're going to see this printed, or this written right above. So you're going to want to delete this for the second one because you already have it defined above right here. You can't have two of these. This is just saying that everything below this is going to be a study, and you only need to define that once. Also, if you're using an RSI script or something that operates in the bottom section right here, you're going to want to write in overlay true, because that's going to make it so it's being printed on the actual chart and not down here. And when we get alerts for where to trade, these labels right here, we want it printed here and not there. So you're going to want to put overlay true if you want to see the stuff printed on the chart. So let me close that real quick. So yeah, we've copied both of the indicators into one, and then we're going to have to define our EMA condition because it's not already in. You can find an EMA script and just copy it in, or you can write it because it's really only a few lines. EMA short, EMA long, EMA close 50, EMA close 200. We're plotting it and we're choosing our color right here. And then now is where we start combining all of the conditions into one thing, which is going to be at the end, which is going to be a long or short condition. So right here, I have defined this as stochastic cross, either of the two stochastic crosses that we get for cross up, and also filtering it to where we have EMA short is greater than EMA long. So we're saying that we can only get this if we get a stochastic cross up and we're in long territory. And we're gonna do the same for this, but opposite condition for short territory. And this is useful because if you see right here, obviously we're in a downtrend and it's being confirmed by the two EMAs. We don't want any bullish signals printing. You shouldn't be taking these bullish trades within a massive downtrend. And of course, the same thing goes for this. You don't want to take this bullet or bearish trade with the price going up. There's no point. So by coding this into here, we're saying that cross alerts don't mean anything unless we're confirmed in a specific trend, which is confirmed by the EMAs. And these conditions are found right here. So at the end of code, at the end of a script, you'll typically find your conditions that will be used for alerts or used for other conditions or whatnot, or at the end of a section of code. So you're going to want to find these in the code. This is a cross up alert, cross down alert, and this is a different type of cross up, cross down. We're going to take all of these and define them. I'm doing this so it's easy, but you don't need to define something as another thing if you're just defining it. Like I'm just saying this equals this. You don't have to do this, but I'm just making it easy to see. So we have specific long conditions and short conditions. Also, you can combine both of these long conditions by saying or and copying that into there. So if this happens or this happens, that's a long condition. But once again, I'm just taking each piece of it and defining it as its own thing so it's easy to see. And let's go back to where we found this. So I'm gonna highlight it and then go up. Oops, that is not where I found it. So right here is where I found it. So bull condition, plot bull, all this stuff. Basically, these are all the things that need to be met in order for that to happen. And then that right there is the other one. And then we have both of our bear conditions. Where's our hidden one? Yeah. So we want to find this in the original code and copy it into this section or any other section to be used furthermore to define things further and have a more accurate long signal based or short signal based off of the indicators. So once we have all of this defined, we have our cross up with our EMA long and short, and we have our cross down with our EMA long and short, filtering out the longs and the shorts, saying which direction we're going in, also showing a cross. We have our bull and bear conditions based off of the RSI divergence. Next, we're going to go into defining them further into an entry. So here I did something interesting with bar sense. This is a little bit of logic that I added myself, and things like this, thinking about little things like this can help your strategy a lot. So basically, this is counting the bars since this long condition happened, and it's saying that it has to be less than 3. So you want this because if you get a long condition and then you wait you wait 20 bars to get your other long condition, essentially, which tells you to enter the trade, that 20 bar period can be too long to where it doesn't give accurate information 20 bars back. So we want this long condition to happen right away within 2 bars or less than 3, and also this condition, which is the cross condition plus the direction of the trend, to happen all within 2 bars. And this basically is what is telling that to happen. So I took the long condition right here, I used the same logic but with the short condition right here, and then I have another entry for hidden divergences, which once again, you don't have to do this. You can do something like this, or you can define everything up here as one thing and then just put one thing in there. but just for ease of seeing it, I defined each one individually. So you can see that each thing needs to be defined in some way. Once we have this, we can then plot these, so we can see them on the actual chart. And this is our long entry, so short entry. This is our hidden long entry, and our hidden short entry. Furthermore, if we want alerts to be sent to our phone or any other device or computer, we can get both of the short entries and the long entries. And here I'm using or, because I just want one alert. So I'm saying this or this equals a long entry, and this or this equals a short entry. Once you've defined these things, it's really easy to use them as one thing, and effectively one thing, and get an alert for it. So now let's look at what we've accomplished and how this can be extremely useful when trading. So, here we have a short that we did, and over here we have a long. Check how much time has passed on the 1 minute chart to get this. This is 8 hours and about 50 minutes, 45 minutes or something. That's so much time to be sitting on a 1 minute chart and watching. That's nearly impossible when, if you didn't do this, if you didn't do this, you could just get an alert here and an alert here and an alert there and quickly figure out your trade without watching it for this entire period. And this is such a useful thing. Every trader that has a trading idea and a trading strategy that they use should be able to code this, because it allows you to have a life and not constantly sit in front of a chart, which is good, because it forces you to only take good trades that are confirmed by all of your indicators, and it makes you less emotional because you're doing other things. But yeah, we can see some of the wins and losses. Here we got loss, loss, win, 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 loss, loss, win, win, loss, win, 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 and there's more back that I haven't tested out yet. But with a 2-to-1 risk-reward ratio, it's fine to have these losses because you have enough wins that are weighted at 2 times more than the losses. And another great thing is, once you have all of this code for a study, it becomes really easy to convert it into a strategy, which then you can use to backtest further. And backtesting 100 trades is great, but backtesting 5,000 on 11 different pairs or 12 different coins or whatever you're trading is much better. And a strategy allows you to do that backtesting, and you would change that, and then you'd have to define entry and exit conditions over there. But in the next video, I'm going to go over this exact code and turning this into a strategy, which can then be used for backtesting, which, like I said, is extremely useful for testing the true profitability of an idea. But as of right now, it's promising. It's giving me accurate signals. I'm losing some, but with 2-to-1 risk-reward ratio, that's totally fine. And I'm definitely going to be setting up an alert system that I can use to send to something like 3Commas or to Alertatron in the future. But yeah, thank you for watching this video. I encourage everyone to learn PineScript and learn how to code, and to find an idea, something like this or any of his other videos or anyone's video, and try to convert it into something that you can use to help you trade and not be glued to a computer all day. Because it's great to just have this printed right here, get an alert, get to a trade, and then be done. But yeah, thank you.